We're going to win so much, you may even get tired of winning. And you'll say, please, please, it's too much winning. We can't take it anymore. Mr. President, it's too much. And I'll say, no, it isn't. We have to keep winning. We have to win more. We're going to win more.
Are you tired of winning yet? Welcome back, ladies and gentlemen, on this fantastic Thursday for what is going to be nothing short of another jam-packed daily market update. And you can imagine what it is we're going to be talking about during this update. We'll be covering the markets, the cryptocurrency markets, and of course what took place yesterday. It was rather interesting as we streamed Trump's Liberation Day speech, which of course took place on the 2nd of April, or Liberation Day as it shall now be known moving forwards. Initially, the price of Bitcoin sort of jumped up by about 3% and then very harshly slammed down following the stock market, of course, when a whole heap of tariffs that we'll look at were announced. And we're going to be getting through all of that. We're going to be looking at how the markets have reacted, what's taking place with the cryptocurrency markets. The cryptocurrency market is really at the behest and very much a victim of the broader markets. And with the sell-off that we saw for the S&P, of course, we also saw a lot of liquidations take place within the cryptocurrency space. And that is really symptomatic of the cryptocurrency space. It's very leveraged. It's an over-exemplification of the stock market, which of course has been processing and selling off due to the announcement of tariffs, and then the actual event took place. I think there was sort of people looking for some hope with it, and actually what you got was the same rhetoric and literal interpretation being implemented. Now, how much of that is priced in? Usually with these events, what you'll get is you'll get a large positioning going into it, and then you'll get the rest added if there's confirmation of what the positioning was on the back end of. The question is where do we go from here? That's important. We are going to get everybody through this, guys. In my opinion, this is just a pullback in what is going to be a broader uptrend, is already for Bitcoin and the stock market. And for me, and maybe this is naive, the reason we want to get everybody through this is because we truly see the cryptocurrency markets as an opportunity, a major opportunity for normal people. There's a duality to the cryptocurrency space. One is the investment side of it, and one is the technology that is truly going to, and they are intertwined, revolutionize the world as we know it. In fact, the evolution of money is built on blockchain. It is a blockchain-enabled money and financial system more broadly. And there is yet to be hundreds of trillions of dollars onboarded onto the cryptocurrency space. And the cryptocurrencies that enable that are going to be worth trillions of dollars, in my opinion. And there's a massive opportunity there for crypto investors. And that's why we're so zealous about getting everybody through this. But we wanted to start off on a slightly humorous note. Let's get into it all. And let's just start off with CNBC's news homepage. And you can see it is massively focused on, of course, what took place yesterday. One of the headlines here says, Trump's tariffs incite fury in China and dismay in Europe. Auto giants surprisingly resilient as sweeping US tariffs spare Canada and Mexico for now. I think there's going to be more of this to come. And I think what's going to happen, in my opinion, on the back end of this is you're going to open trade talks and potentially end up with lower tariffs across the board. We'll look at what the tariffs were that were implemented. We also have news in regards to European stocks. They have fallen today by about 2.3% as key sectors upended after Trump's tariffs. Trump will buckle under pressure, one analyst is saying here, if Europe bands together over tariffs. German economy minister says. Germany is a big player economically. It's the third largest economy in the world from a GDP point of view. One of the largest exporters in the world, certainly. And one of the people that have the most to lose, or one of the nations that have the most to lose on the back end of all of this. How did the US tariffs arrive at these figures? Pharma tariffs relief likely short-lived with sector-specifically duties on the horizon, etc., etc., etc. Here's where Apple makes its products and how Trump's tariffs will affect it. There's a lot on the table here. UK escapes worse off Trump tariffs wrath with 10% levy, but warns of threat to global economy. You can imagine, and certainly this is largely what has kind of spurred all of this. There's some breaking. Commerce Secretary Lutnick, Howard Lutnick, interesting guy actually. I watched a podcast of his. He was one of the people that was worst affected by the World Trade Center. He had one of the top floors and I think lost 40% of his staff when that whole thing happened. Very interesting character. But Lutnick says Trump's reciprocal tariffs will spur countries to examine their trade policies. I think what we're going to see may be lower tariffs across the board, but right now they have to kind of, bluff is the wrong word, but front what they're imposing. This was interesting from this individual. This clip will go down in history. At 4:25 p.m. ET, the S&P 500 futures were trading at 1.7% higher. At 4:26, so a minute later, PM ET, Howard Lutnick handed a poster outlining reciprocal tariffs to President Trump. Stock market futures fell real time as Trump read off tariffs name by name. At 4:42 p.m. ET, the S&P 500 erased over $2 trillion in market cap. It always sounds worse when you say those $2 trillion mark, but these are normal moves. That's minus 125 billion per minute. And that's the nature of the market that we're in. And when we're crypto investors predominantly here, look to the cryptocurrency space, it's important to understand all of this because we are just at the behest of what's going on in bigger markets and economically and politically, certainly in regards to what is taking place. So let's just look at the Bitcoin chart, go down to the daily. It was rather interesting, or maybe even put it on an hourly and look at what sort of took place yesterday. You had this kind of run-up when this took place, only for it to dump massively, but we really are only just where we were a few days ago. Let's take a look at the S&P. The S&P is yet to open, so maybe the E-minis is the better thing to go and take a look at, which we'll do now. This is down about 3% today. You can see, this was the effect. Run up, sell off. It looks just like the BTC chart because we really are at the behest, you can see this, of broader markets. And you can see just how in sync we are trading with the broader markets. It's still my opinion that despite all of this, actually, for example, the likes of the S&P, which is likely to potentially open down today, I would say, is still in an uptrend and we're still going to see continuation. And despite, I think a lot of what was announced yesterday, despite the reaction, has already been priced in. And it's going to be very interesting to see, certainly today and tomorrow being Friday, we also have non-farm payroll tomorrow, how the stock market does. So there's going to be a lot of angst. It's going to be interesting, predominantly for me, to see how the stock market opens up today. And when it comes to the cryptocurrency space, which is just in step, it really is just a game of liquidity and liquidations. We're an over-leveraged space. We're a hyper-exaggeration of what takes place in the stock market. And it's why we pay attention to the stock market and the things that are driving it right now, which is predominantly tariffs. You can see this is, of course, we had about $500 million liquidated over the past 24 hours to both the long and the short side. That initial run and then the sell-off the other way. In my opinion, as somebody that's traded for many years, I would personally never trade events. If I had trades on, I'd usually take them off or at least come up with some form of hedging, just because it can be a bit of a whipsawing event. And you can see these were the kind of tariffs that were announced, and there was a lot of them. And they're reciprocal, but they're not reciprocal in the sense that they're as harsh as some of the tariffs that are put on the United States. So, for example, tariffs charged to the US in China, or from China, is 67% as a whole. The US is now reciprocating it to 34%, et cetera, et cetera, et cetera. So they've gone easy predominantly. I think this is going to open up talks. And the hope really is, if you take this all literally, which people have the right to do so, the markets are hedged accordingly as a result of, or at least acting as if they are. If you take all these literally and that this is going to be the case, and it is as far as now's concerned, yes, I think there's a lot of reasons to be at least concerned, but I think the show must go on. I think there's going to be leeway, and I think we're going to start to see that, and negotiations opened up, just as Lutnick said, because what I don't think the right path forward is to escalate this. So there's talks that Europe and other countries are going to get together and sort of look to reciprocate or escalate tariffs on the United States. I don't think that's the playbook. I think the playbook is actually for them to commune with the United States and actually look to work this out. And any kind of resolve to any of this, I think, sees the markets do well. We often expect the worst and then sort of backtrack from that. And remember, equity investors are glass half filled people. What's the alternative? So it's my opinion that this isn't going to cause a recession, and actually could do the exact opposite, and it's going to open up talks and potentially more of a freer trade across the board. Not that we have free trade, but the cryptocurrency markets, as we showed you on the smaller time frames, very much didn't appreciate this. Despite that, I don't think we're doing too badly at all. We're consolidating in and around the 30 weekly moving average. We are doing a giveaway, by the way, guys, where one of the prizes is our market mastery course, which will show you how we use the 30 weekly moving average in line with our sort of market mastery techniques, being sort of phase analysis. Markets moving 4 phases. You've got an accumulative phase, phase 1, an uptrend, phase 2, a topping phase, phase 3, and then a downtrend. I think we're very much still in phase 2, which is an uptrend, and we're going to see continuation on the back end of that. Certainly, we've got higher price targets for all of this. I still think that the S&P is going to eventually make its way higher despite the uncertainty. And what's going to fuel that is any kind of better picture shaping up coming out of what is right now probably one of the worst pictures that's being painted. Certainly, if you look at sentiment, it's at March 2020 lows. It's at .com crash lows, and obviously the subprime crisis 2008 lows. So all eyes are on the S&P 500 today and how it's going to open up, and how some of your Mag 7s are going to do, like Tesla and some of the others. There was a rumor yesterday, and it was a rumor. I think Elon Musk came out himself and said, yeah, we're not going to, or he's not going to step down. There was a rumor yesterday that he was actually going to come and step down from his political role at Doge. That from himself has been sort of deemed not the case. So we will get through this, guys. It's just another day in the cryptocurrency space, which is really just reactive to everything going on the bigger pictures, which is why we try and take sort of account of it, because it really helps us understand what's happening with our small but significant space. The evolution of money, the evolution of finance, the evolution of systems broadly is going to involve crypto in the same way that the evolution of business migrated onto the internet. And systems more broadly, crypto is an evolution once again, and there's going to be multiple $1 trillion layer ones that come on the back end of that. And it's our job to try and find those. I think a lot of those $1 trillion layer ones are going to come on the back end of what's going to be the evolution of money, which is stablecoins and finance more broadly. The Stablecoin Act advances to full House vote. The US House Financial Service Committee has passed the Stable Act, a bill aimed to regulate stablecoins with a vote of 32 to 17. The legislation, officially known as the Stablecoin Transparency and Accountability for a Better Ledger Economy, interesting, Act of 2025, received bipartisan support with 6 Democrats joining the Republicans in favor. The bill now awaits a full House vote. So this is a great step in the right direction. Ellen Tourette is a brilliant person to follow. Both the Senate's Genius Act and the House of Stablecoin Act have passed out of their respective committees. So what now? The bill awaits a debate on the floor. It will likely pass, but this is moving things in the right direction. And actually, just yesterday, I took the decision to do it pre the Liberation Day speech, I actually consolidated my portfolio into smaller plays, predominantly focused on stablecoins and the future financial system. Obviously, I want to keep some AI, some GameFi plays and stuff like that in there, but we were already, but we're now even more so focused on all of this. Talking about stablecoins, this is CZ. Stablecoin war, I mean healthy competition just getting started. This is from Jake McDonald, who's the CEO of Standard Custody. As promised, Real USD is now integrated into Ripple's payments, cross-border payment solutions with near global coverage through 90 plus payout markets and instant connections to banks, FLS, payment service providers, exchanges, and many more around the world. Enterprise utility right out the box. I think we're going to see Real USD really start to gain traction in regards to becoming one of the largest stablecoins. And of course, there's going to be great benefits there for XRP. A lot of people not paying enough attention to XLM and some of the other plays out there. And we just entered one that's the second largest issuer of stablecoins to date that nobody seems to really talk about, but it's consistently been high up in the market cap rankings. So really one of the main takeaways I want people to take away from today is, of course, what's happening with the cryptocurrency space. It's just a victim of higher powers, we'll say, in regards to politically what's taking place, how that's affecting the stock market through uncertainty and repositioning as a result of a remodeling of forecasts. Crypto just long for the journey. Any kind of resolve, I think the majority of this has been priced in, by the way. Any kind of resolve of this, I think, is going to see that rally and continuation that we're very much expecting. And pay attention to stablecoins and what's currently taking place, guys, because they are going to offer one of the largest opportunities. They're the real big narrative, I think, for this bull run. And, you know, I'm now positioned accordingly. So that's it from me. Hang in there, guys. Never forget what this space is trying to do and is going to enable. And I think that gives me the kind of fortitude, I guess, to persevere, even with perhaps frustrating days like we saw yesterday. We may see continuation of that today, but the main focus for me is how is the stock market going to open up and what kind of news are we going to get following the next couple of days. And also, tomorrow's a big one in regards to non-farm payroll, but we'll update you on all that more in tomorrow's daily market update. That's it from me, guys. We'll never get tired of winning. Thanks for watching. I'll see you all in the next one.